with this assumptions in mind, then I'm just going to craft my investment strategy for 2024. Okay, so that whatever I shared just as external, it's also good to revisit your internal situations. Okay, like for example, I hope you all can remember what is my objective. Okay, to have 1.4 million of investable assets. What are investment assets? Basically, all the money exclude my own state property lah. The money I can use for investment, so my own state property not included, or either that 7,000 of monthly passive income. So this is for me and my wife, 2 packs. Okay, this is my objective. Okay, it's good to revisit. So I've checked, I should be able to achieve this by 65 years old. Okay, my CPF, annuities, dividends, and in our last meeting, I talked about rental. I'm actually considering rent out my current place, then go and stay in JB or Malaysia, whatever. But of course, haven't convinced my wife yet. Okay. But anyway, I think by 65, I'm quite confident just by CPF entries and dividends alone, I should be able to get the 7,000 of passive income. Okay. So I'm 49 this year. So the question is, can I achieve it earlier? So I'm actually hoping to achieve it by 55. And that will be my investment objective for maybe for the next 6 to 7 years. Okay, trying to, get it the 1.4 or 7,000 per month in the next the 6 or 7 years. Okay. So this is what I would try to achieve. Instead of 65 financial freedom, I want to try 55. Okay. So always good to understand the risks. Is it worthwhile to take the risks? If things don't turn out as planned, can I still achieve my objective at 65? Or probably another way to ask is how much cash can I use for higher risk investment? So basically, how much cash can I lose? Lose already, I still can achieve financial freedom at 65. Okay, so please consider risk. Please consider risk. I know all of us want high returns. Okay, but don't because of I want to try to achieve earlier. In the end, can only retire at 80. Then that's bad Okay, then I'd rather you don't do anything. But if you tell me that, okay, I have some spare cash, even you lose the spare cash away, you still can retire at 65. Then I think it's worthwhile to do it. Okay, that's my point here. Hopefully it's clear. So please look at the risks. Don't just think that the sun will always shining on your side. You will always, if you invest, sure make money. No. Ask yourself what potentially you will lose if you actually take higher risk. So in my case, do have some cash that I can use for higher risk. If things don't turn out well, okay, worst case scenario, I retire at 65. Okay, if things are okay, then maybe I can accelerate 55. I can hit my financial freedom. Okay, then next we will review the PPIG. Okay, always good to do the PPIG all over during this investment review. Okay, am I adequately covered? Am I overly covered? And what is the cash value of my insurance? Okay, I realize a lot of people didn't do this. Okay, especially the third one. Okay, that's why I say a lot of people buy insurance, but they don't know what they buy. So I really urge you all to do annual review. For all you know, you're already so cash rich. Okay, and please make sure you are adequately covered and not overly covered. Okay. Like for example, I think 2 years ago, I just upgraded my hospitalization plan. Okay, I used to only cover up to public hospital, so now I'm actually covered to private. So this happens in one of my reviews. I said, okay, I think I can afford. I probably want to upgrade. Okay, last year when I do my review, I actually also have coverage for early stage illness, so for income replacement. Okay. Okay, this one I probably review next year. So I have some insurance is actually more for dependent needs one. That means anything happen to me, my wife and my daughter will have money to live life as usual. And now that my daughter is going to become 18 years old already, my wife is fully employed. I may not need this insurance anymore lah. Then probably I can deploy some of my money elsewhere. Okay, and of course, you may actually want to consider annuities because annuities you have to go in earlier. I think once you hit 50, then the return is not so fantastic. So for those who actually want to do annuities, you also should consider earlier. Okay. So my point here is this: please try to do an annual review for your insurance. Some worst case is they are not covered. Like for example, I was so surprised. I was just talking to one of members. I'm glad he talked to me lah. Then he realized that he don't even have hospitalization plan. Quite scary. In Singapore, you don't have hospitalization plan. Or very worrying. All you need, okay, all this person need is one illness. That let's say need one operation, one can 6-figure just gone like that. So hospitalization is a must. So if you can cover up to private. Okay. So yes, please do this review. So that's what I've done. This year, probably not much has changed, but like I mentioned, for the last 2 years, these are the difference I made. I upgrade my hospitalization plan. I covered for early stage. And maybe for next year, when my daughter is, more or less more independent already, then probably I will review lah. Do I actually still need insurance for dependent needs? Okay, which is basically my life policy. Okay, because if I take up my life policy, that is actually one good sum of money, which I can do a lot of things with. So next is property. Yep. Okay, I'll probably start keeping track on market for good opportunities. So my ideal plan here is this: I will have two. So the current one I'll rent out. Then the smaller unit, okay, is actually for my own sale because I don't need so big anyway. And in that sense, if I actually stay in a smaller unit, okay, it don't, as long as I just like the place, even if they don't have a lot of the price don't increase a lot, I think it's actually still okay because I'm actually renting out my current one. Okay. And I just did a check, quite interesting. Based on last year transaction, if you want to find something below 1 million and it's more than 700 square feet, which probably at least two bedroom, there are 400 over transactions. So a lot of people say that, Singapore now don't have 1 million, no need buy condo. Not true. Not true. So there are this criteria less than 1 million, more than 700 square feet, still have far over transactions. Okay. Yep. So this is what I will be keeping a lookout for when the opportunity presents itself. Yeah, I probably will take action. Okay. And if I can do this, then really the chances of me 55 hit my target, I think is more likely. So that's for my property. Okay, income will still be my main investment. Okay, 60% to 70% my funds. Dividend with REITs and blue chips. Okay, focus on dividends with REITs and blue chip. So Singapore market is actually very good for me. So even though Singapore market not sexy, sideways, very good for me. Now we're actually expecting a good dividend yield about 5 to 6%. Even the banks are giving 5% above. I think it's actually very good. Okay, I think that's quite a good deal. REITs 6% above, not a problem. Okay. I expect stable market, so it's actually good for me to continue my regular investing in Singapore. And okay, compared to other countries, Singapore, I don't have to concern about tax. Like Singapore dividend, like US dividend tax is actually about 30%. So not worth it. So even like, let's say US stocks give good dividends, after 30%, it may not be as good. So I'll still keep doing my regular investment. So in fact, I have a few regular saving portfolio on Singapore into REITs and blue chips. Okay, some even on margin. So I will just keep doing that. And the good thing about 2024 is the REITs price may go up. If let's say interest rate come down, okay, the REITs price may actually go up. And this year, something that I'll do differently is the growth part. I'll probably pay more attention to here because I have I can afford some cash, take some risks. Okay, I also have the objective of hopefully able to achieve financial freedom at early stage. So I'll probably take some cash. In this year, take more cash. For US market, I would probably do short-term investment using option while waiting for the market to correct. So really, I don't know when the market will correct. It's $1 million question. So that's why between now and the correction, I'll do short-term investment using options. So when I actually invest in options, it can be weekly, it can be about 2 weeks like that. So it's actually quite short. So until when, if let's say, if I'm really correct, really the market really went down, then I will invest in some US companies for long term. Because eventually, I think it will still go back up. So this is something I'll do differently this year, and this is something I'll pay more attention to. Again, like I said, please everything tie with your objective. So why I have this objective is because I have some money to spare, and I hope to accelerate my financial freedom plan. If you tell me that no, you don't have a clear objective, now you're very comfortable, okay, this additional risk may not be worth taking. Okay, please take note of that. End of the day, it depends on your risk appetite, your objective. If you don't have a clear objective, if give you another $1 million, you also don't know what to do with it, then please don't go and take this additional risk. Okay, because for all you know, then suddenly you just lose $2 million for it. Okay, so be clear. So this is my case. May not be suitable for you. As for China market, I'm still bullish, but I think it's still too early to put money in. I am bullish for long term. When the time is right, I still see China market as a very good growth market, but just not this year. Just not this year. Okay, so this is my framework. This is my investment strategy for 2024. So eventually, okay, your action plan will come down to PPIG. What should you be doing for insurance? What should you be doing for your property? What should you be doing for income? And what should you be doing for growth? So I just shared mine. And this should be your takeaway for today. Hopefully, I've actually given you the framework to craft your investment strategy. What's your market outlook? Where are the opportunities? Okay. Then what's your objective? What's your risk appetite? Okay, in terms of risk appetite, you may ask yourself, how much cash can you afford for higher risk? Then you review your PPIG. So what are the changes you need to make for insurance? Your property, is it time to review? Okay, for some of you, is it want to upgrade HDB to condo to larger condo, or sell one, buy two, or whatever? Okay, income, any change to that, and your growth plan. So once you have a clear picture for this, then yes, you have your investment strategy for 2024.